Hello, I'm Scott Hall. I'm an unconventional farmer, and this is the second video following up from the first video with the theme of the risks and rewards of farming. Now, in the previous video, I alluded to secular cycles, which I will continue to allude to, and as the videos go on further, I will delve deeper into it, but I cannot explain fully what a secular cycle is because it's beyond the scope of this video, and it takes a little bit of homework. But some of the drivers of the secular cycle, well, I'll reverse that. Some of the effects of a secular that we're experiencing in our economy that are driven by the secular cycle are the inflation that we're starting to see. Also, we are seeing at the same time deflation, recessionary type effects on certain sectors within the global economy. And that essentially is stagflation. It's a difficult thing to handle and address. But that aside, what we can take from that essentially is the purchasing power of the consumer is diminished. This is a macro trend. This is a large trend. And the instruments and techniques used to address this have run out. They're not effective anymore. And that is the constant reduction of interest rates and quantitative easing in the economy. So we can just, for the sake of simplicity, distill it down to a reduction in purchasing power for the average consumer. Now, as I stated in the earlier video, we are in a situation where we find that as farmers, we are soft commodity speculators. We are futures traders. We are beholden to the market. And the market is much bigger than we assume. We tend to be caught up in the smaller business cycles, which is all, the smaller business cycles are all based around consumers' access to credit, the price of credit, and the spending power of the consumer. Now that has influenced what food people buy, naturally. So, like I said in my earlier video, I'm going to go into what I think are winners and losers moving into this structural change, and why, and what I'm planting. And then I'll make another video, going into some more heavier hitting, larger weight type of very impactful crops that are associated more with global food security, as opposed to the purchasing power of customers, consumers, and the credit cycles, business cycles, particularly within Western economies. So I'm just going to now wheel back to where I left off in the last video, and I'm going to first talk about what I'm planting. So going back to that first video, I did I shared that little line, a little maxim of when everyone's pulling it out, plant it. Now that is a simplification, but we have to look deeper into that to find out if it's really worth doing. You know, if everyone's pulling it out, it might be a damn good reason. But let's have a look further into that. And I'm going to use my example and my choice of what I've decided to grow as the example. What I've chosen to plant are bananas. Now, that might sound boring. It's not a fad crop. It's not one of those crops that is a new exciting thing and everyone's talking about it and it's capturing the imagination of everybody. And that is one damn good reason why I'm not why I chose it, because it's boring. Because there's another little line that I like, which is when the cab driver is talking about his stock portfolio, it's time to sell stocks. Or if it's a very hated investment, that's the time to get in on it, because it's generally a sign that it's bottomed. And if you're going to invest, expose yourself to a certain type of asset for the upside, you're going to want it you're going to want to buy in when that price cycle has bottomed. You don't buy in at the top. Why would you? So I've chosen bananas, and I'll give you my indicators as to why, a couple of reasons as to why. The first reason is, yes, everybody's pulling it out. Bananas are just not paying like they used to. You know, it's hard work, and so because they're all getting pulled out generally, the supply side is falling big time. Now, what's happening is, from my own observations, my own work, investigating the situation, speaking with other farmers and having a good look around, speaking with people in the market, is that those that are leasing land, or don't own their land, or haven't got their land paid off, they've moved out or moving out. They're struggling. Those that do own their land, perhaps, generally it's third or fourth generation farmers that own the land outright, they're just going to cattle. A lot of them, generally speaking. So that's really pulling bananas out of the market big time. And I will add this. Bananas are a staple diet, a staple food. They are one of the most often bought and purchased types of fresh food in the whole world. Bananas are super important. So we've got that buying strength behind it, even though the price might be low. We have this huge demand, structurally sound demand behind a crop that's a staple globally. It's part of all of our culture, generally, even in Europe. Bananas, everybody eats bananas. I think bananas, apples and tomatoes are the top three. I'm not sure, but they're at least in the top five. So we've got this buying pressure all of the time, constant buying pressure, but the price has been falling for a lot of reasons that I won't really go into today. There's another angle to it too. A lot of banana production, well, one of the reasons banana prices have fallen is because of the massive scale, which this is a big dynamic in a lot of deflationary influence on prices of agricultural commodities. It's the scale. Now, the scale is huge, industrialized, and it's centralized. So what may be apart from the fact that a lot of people are pulling out bananas, reducing the supply side, what's another reason why there may be it might be a good reason to plant bananas? Why are bananas moving sort of the supply side? Why is it diminishing? So one of the reasons is, well, potentially diminishing here, let's say. One of the reasons is centralisation carries enormous amounts of risk. Now, for example, in Australia, most of our banana production now is in Tully. I suggest that banana production in Tully has peaked because of a couple of reasons. I will say that one of them is part of the credit cycle. So access to cheap credit due to inflation, and where it affects farmers, the inflation affects the input side. It's structural inflation. So inputs such as ammonium nitrate-based fertilisers like urea, superphosphate, and glyphosate, which are the three major, apart from diesel, are the three major inputs into most agricultural commodity production. They're creeping up. They're not just creeping up, they're jumping. It's becoming, I think there's close to 1,000% increase in the price of urea over the last between 6 and 8 years. I might be wrong, but it's close enough. It's phenomenal, exponential. That's chewing away the margins of the big producers. Now, I have to just quickly add that there's a clause here, because those dynamics input side inflation affects all farmers. But we have another trick up our sleeves as smaller farmers, and that's the regenerative nature of farming that we choose now, which we're not exposed to that. We don't use these fertilizers. I'm already proving that on my farm, that I'm having great results without these fertilizers. That's another conversation. I use syntropic agroforestry for that. That's another part of the strategy, very important part of the strategy, but I'm just going back into the basics here. So the profitability, the viability of large-scale farming generally, but in this case in bananas, is threatened. The margins are being chewed out by the input side pricing costs. That's one of them. So what that's going to mean is that as this secular cycle moves along, this business model of large-scale farming is going to be less and less and less viable, because it relied on cheap inputs that were driven by this huge industrial expansion lasting the last essentially 200 years, but 80 years, or since the end of World War II, was the major jump. So please bear with me. I thank you for your patience while I swing from macro to micro here. It's hard to package. It's a very holistic affair. So that's threatening large agriculture and big ag. And in my third video, I will move further into this, particularly with wheat. But so that's indicating that a good supporting indicator that the market has bottomed. The big farms are not doing so well, will not be doing so well, because there's nothing in the major trend that's going to change that dynamic. The other one is disease. Because of the centralisation, we'll use Tully as an example, Tully in Australia as an example. Because of the centralisation and the concentration of so many of these plants, disease is becoming a major issue in Tully. It's just a process. It's just a matter of the disease spreading through the bananas. They're doing everything they can to contain it, but it's still working through it, because in Tully, conditions have been created through massive monoculture to support the spread of disease. There's not much we can do about that unless we radically change that arrangement. So that's another reason why I think banana prices may have bottomed. And I'll give you one more reason. I've watched the prices. They are moving up. I've tracked the prices of bananas, and they're creeping up. Now, with the last two things I spoke about, with the risks in Tully, the risks of centralisation, the diminishing returns on massive scale industrial agriculture, plus the fact that the smaller growers, the more dispersed growers around the country, which gives us great resilience, plus them pulling out bananas, has already made an effect. Banana prices are creeping up. Plus, like I said, we're going through an inflationary recession. We're entering an inflationary recession. We are entering stagflation, which naturally pushes food prices up as well. So, for me, I've chosen bananas for that reason. I'm looking at a long-term, sustainable upward trend in prices. Plus, because of the agricultural methodology that I've chosen, I am not exposed to the inflationary risks of the inputs. I use a management-based system. We can talk about that another time, or you can look through all of the rest of my YouTube videos and check out how it works. So that being established, bananas, for me, are a winner. Everyone thinks I'm mad. To me, that's a good indicator. People are pulling bananas out. That's a good indicator. Bananas are not as profitable in big ag. Risks are increasing with big ag. And I'll add one more. Let's use Tully as another example. I can't remember when it was, but it was about 12 to 15 years ago. Now a massive cyclone hit Tully, wiped out Tully. We still had a lot more banana growers around the country than we do now. It wasn't so centralised then. But banana prices went up by a factor of 10, 1,000%. We had people, and I know this, I know people who had certain influential members in the Melbourne markets, Sydney markets, arriving at their farm gate offering cash money for bananas. So there's that as well. That just goes to show you how strong bananas are as a cultural food, a staple food, how important they are to everybody. That's not a fad. Demand won't diminish. So that's why I've chosen bananas. Now, there are many other analogues to bananas for different climates, but we all have to do our homework on that one and find that out. It's really worth investigating a lot of these, and keeping in mind that whether it's bananas or not, there are some of the dynamics that involve the price cycle, that influence the price cycle of bananas, that influence all foods. And that is the structural inflation, the input side price rises, and stagflation in our global economy. That's all part of a secular cycle. Again, I'll allude to that, and I can't cover it. I wish I could in this, but please do some more research on that, and I'll put a link in the description here for a good book about it. But we must be aware. We must be aware of these major influences, and it's going back to the psychological side of it, and the mind of the investor. We don't really want to find an easy answer and say it's just because of this. We don't want to rely on slogans. We don't want to rely on social proof. We really need to find out for real and make up our own mind and use critical thinking to determine whether it's a crop that's really going to work for us or not. The market doesn't care what you think. So it just pays to take a step back. Know thyself, know thy enemy, with the enemy being a metaphor for the challenge that we face. Know it. Know it really, truly, deeply. So objective analysis, critical thinking, all very important things. And, some of these things that we may discover through our careful analysis, objective analysis, they may not be what we would like. They may be, something that we don't want to happen. But just, facts are facts. So that's one of the crops that I'm choosing and why I'm choosing it. And what I will do is I will make another video about what crops I think are worth not investing in, with crops that we may want to get away from. And I'll go into that next. So thanks for listening.